morning, good evening, wherever in the world you're watching from. It's Business Morning live on Channels Television. I'm Ladi Williams. Great to have you join us. Let's drill down now on the oil market. As we see oil prices ran out of steam today after gaining more than $5 a barrel in the previous session, with concerns that surging crude will feed into a demand-killing recession, slightly outpacing continued worries about tight supply. Brent crude futures fell by 43 cents to $105.84 a barrel. The contract rose 5.1% on Monday, the biggest percentage gain since April 12th. WTI crude futures for August delivery dipped 28 cents to $102.32 a barrel. The contract also climbed 5.1% on Monday. That was also the largest percentage gain since May 11. The August WTI contract expires on Wednesday, and the more actively traded September futures was at $98.98 a barrel. That was down about 44 cents. And previously, the MPC meeting, they had their, what's it called, the meeting, the retreat that happened a few weeks ago. And they're going to hold today in Lagos. They're going to be meeting its countdown to rate-setting season. And today we're going to be covering that right here at 12 o'clock, right here on Channels Television. At the retreat, according to the central bank governor, Godwin Emefiele, the retreat, which was tagged Monetary Policy Implementation in a digitally evolving developing economy, would enable members of the financial sector to share their experiences and thoughts on the emerging issues, with the objectives of collating some implementable measures to address the impacts of digitalization on the Nigerian economy. We'll have that track right about now.
Our process at this retreat will be at looking at whether or not we have done well or done the right things in the last couple of years, adopting our own homegrown policies, and to conclude that in the light of existing global challenges confronting all economies, should we continue to do what we have done before, or select the good aspects of what we have done before and then think about how to adopt new ones in the light of the global challenges confronting us, and indeed also confronting us domestically, with a view to coming up with the right tools with which we would be making our monetary policy decisions going forward.
Now to our first conversation. Global inflation surges due to supply chain bottlenecks, labor market disruptions, and the resurgence of global demand post-COVID-19 recovery. This has been the global story since February. Will it be the same for the second half of the year? We have that conversation now with Jerry Nebwe, research analyst at Cardinal Stone, joining us right here. Great to have you.
Hi, Larry. Good to have you. Good to be here on the show.
Nice, nice, nice. So has the world adjusted to the impact of the war yet?
Say again, I didn't get that.
I said, has the world adapted to the impact of the war yet?
Well, that's an interesting conversation. In some quarters, we say yes, they've adapted. In some other quarters, we say, well, globally, we're still feeling the impact. But what is obvious as far as the war is concerned, and the implications for the global economy, is that there is increasing global uncertainty. And this was primarily triggered by the war we're seeing in Ukraine, right? Global uncertainty. Now you have the war in Ukraine, which in itself has come with associated sanctions. Sanctions have led to supply chain disruptions across the globe. We're seeing global inflation, energy costs, food costs climbing, capital flights from emerging and frontier markets, increased risk of distress, of debt distress in emerging markets, and worries about a new global recession. So by the time you add all this, it's easy to say that we're still reeling from the impact of the war.
Yes, they're still reeling from that impact. And obviously, inflation has been the elephant in the room, all through this year. And everyone is looking for that indication. When is it going to peak? What should we be looking out for, to find that peak level?
But that's interesting. No one expected that inflation would get to this level that it is at the moment. Take the US, for example, they have an inflation target of 2%, and now you're combating with inflation at 9%. In retrospect, they would have said that last year, perhaps the Fed would have accelerated tightening, but for fears of not trying to disrupt the growth, the post-COVID recovery, they had to delay any tightening of the monetary policy stance. Now, with inflation at current levels, we are seeing acceleration in tightening across the globe, not just in the US. We're seeing the same thing in the Euro area, in emerging markets, even in Nigeria as well. I mean, we saw the MPC hike rates the last time they met. They're meeting again, and then we'll see what else they're going to do, even though they've maintained a hawkish stance. Inflation is a major problem. Energy costs are spiking, food costs are rising, so they will do everything just to make sure they bring it down.
Yeah, and doing everything. What are you expecting, for the decision today? What are you expecting?
Well, that's interesting. It's a 50-50. They could hike rates and they could leave it where it is at the moment, while we're looking out for all the other parameters that they have to consider. But what is important is that they have constantly maintained a hawkish stance. That's what's important. Even if they don't hike rates today, yesterday there was a bond auction. Rates were higher across the offered tenors at 60 basis points, 60 basis points on the short end, 50 on the mid end, and 60 on the long end. That's an indication of the direction that monetary policy is likely to get to. When you add high inflation, currency pressures, and naira weakness, so all of these points to a tendency for risk to be higher.
Right, and the hawkish stance, that's been the rhythm of, global central bankers at this point. But with many countries, hawkish when it comes to interest rates, what are some of the possible impacts, on the economy for the second half? Talking about the Nigerian economy.
Yeah, with the tightening of global financing conditions, it typically would lead to high borrowing costs for governments, especially when you come down home to countries like Nigeria and other countries in the SSA region. Like I said earlier, there is an increasing risk of debt distress for most of these countries. In 2015, among SSA countries, just about 25% were at a risk of distress. Now in 2022, you have over 50% at a risk of distress, some already in distress, while others are at a very high risk of distress. What that means then is that these countries have to be able to access the global capital markets in order to balance their fiscal positions. But with tightening conditions, that makes it more difficult for them to be able to cope with all of this. And that's a major, major concern for Nigeria as well, given our high reliance on borrowings to be able to balance our fiscal budget.
Yes, quite a major issue there. But how would you, assess growth of the Nigerian economy right now? Back to pre-COVID levels at all?
Well, growth looks good, on paper, if I may. Looks good. I mean, we expect 3%. Last year was about 3.4%. In terms of actual activity levels, we have surpassed, 2019 levels, before COVID. However, when we look at where we're coming from in 2016, before the recession, and I don't think we're anywhere near there in terms of actual activity levels. So if I paint the picture, before 2016, we're growing at 5%, 6%, 7%. Then the recession came and disrupted everything. In 2017, 2018, there was a recovery from recession, and we liked it. We're growing 2%, 2.2%. And then COVID came and halted that growth process. Halted the process, and now we are back to pre-COVID levels. So the real question is, when do we get back to where we're actually coming from, the original start point, which was pre-2016? Is it possible, or is our growth or actual activity levels at the moment the new normal? On paper, like I said, yes, growth looks good, but not yet at the level that we want it to be. And the other question that we also need to be able to address is the inclusiveness of growth, the sustainability of growth. So the growth that we're seeing at the moment, does it look good? Is it inclusive enough? Is it sustainable in such a way that can drive the long-term development of the country? That's the key question that we don't think is fully reflected in the growth numbers we're seeing.
Yeah, quite a big question there. And also we've seen, increasing capital flights, from emerging markets. Is there hope at the end of the tunnel that we'll see some kind of reversal at some point?
Well, that would have to come from an improvement, of global risk dynamics. Right. Currently, there's risk of sentiment. Rates are higher in every other country in developed markets. So, what's the point of staying in emerging markets where the risk, premium may not be satisfied for foreign investors? Right. But until we see inflation coming down, the fears of global recession deepening, then we'll probably see a relaxation from the point of view of foreign investors. But at the moment, uncertainty is high, the risk is there, and so there's likelihood that there'll be more intensity in terms of capital flight.
Right, and right now we're dealing with energy issues. Talking about diesel, we're seeing the cost of diesel over 200% up. Compared to a year ago, and at the end of the day, we're trying to tame inflation here, and we're also seeing oil importers there putting the pump price at about 170 to 180 naira. So I'm wondering, is it possible that we'll see, inflation tamed, in this country anytime soon?
For us, the risks for inflation is well balanced to the upside. That's what we see. And like I said earlier, food costs, energy prices, these have been the key driver of inflation globally. And that's not too different from so you have energy cost pressures, you have food cost pressures. Add to that currency pressures in Nigeria, and then you can tell the direction of inflation is likely to go. Then you also have businesses who are likely to pass on these costs, because for a business to be able to thrive in Nigeria, then they should be able to pass on the costs to their customers. But what happens then when you pass on these costs to your customers is that you accelerate or you increase the multiplier effect of inflation. And that further leads to a worsening of the misery index. Overall, it's just not looking good at the moment for inflation. We expect that inflation could exceed 20% by the end of the year. And this could also have been worse if not for the government shouldering the subsidy burden on PMS. So you take out the impact of subsidy. If we had to pay for PMS at market reflective rates, then we would have seen more worrying inflation numbers.
Right, and also, you talked about debt earlier, and we still have debt servicing issues. Can you paint the picture of what it is right now in Nigeria?
Debt servicing issue. So you look at the debt service revenue ratio in Nigeria is in excess of 80%, and that's from about 50% we were coming from in 2015. So that's a worry, and that also speaks to what I said earlier. We still need to be able to balance budget, which means that they still need to rely on external sources of funding, local or foreign, as the case may be. But then the key worry for us is being able to service the debt. Of all the countries I talked about, risk of debt distress, Nigeria at the moment is not at the level yet where there's so much concern. I mean, the risk of debt distress for Nigeria relative to some other countries in the SSA region is lower. However, the high debt service revenue ratio elicits worry at the moment.
All right, so what's your outlook, for the markets?
For the markets, as we go towards the second half of the year, I think for the markets, the outlook, I'll begin with equities. The outlook is going to be influenced by a few variables. We are going to an election year, so there's going to be intense electioneering, and that traditionally comes with risks for the markets. Obviously, it means that foreign investors will still remain on the sidelines, even though they have not been as active in the market as we would have loved them to be. But that's nothing likely to come from that front. But overall, there's a likelihood that there'll be some sort of apathy, because investors don't like uncertainty. And that's something that electioneering brings, uncertainty. Investors don't like uncertainty. So that can have an implication on the market. Yield dynamics as well is also a key driver, a key factor to consider. And we expect that rates will go higher as we approach towards the end of the year, which traditionally leads to lower valuation and implies lower valuations for equities. So that in itself has implications for the market. Company performances as well. Some companies have strong fundamentals, which may be good opportunities for investors to play in, especially those who want to stay for the long term. So the performance of these companies and the fundamentals that they have, could also drive some sort of risk-taking, cherry-picking in select sectors. Maybe the banks, for example, investors may think that higher yields is going to be positive for banks, and so that may be a good opportunity to position in that sector, given that we didn't see lots of investors position in banks in the first half of the year. And the developments across the globe, what's going to happen to commodities? This has implications for companies in the country. The oil palm producers likely to benefit, from the rally we've seen in CPO prices, but then the importers, those who depend so much on commodities, or on imported commodities, commodity raw materials, are likely also to bear the brunt, of higher commodity prices, in addition to FX challenges in the FX market. So these are some of the considerations that we have as we go into the second half of the year. In the fixed income market,
carry on.
Fixed income market, obviously, higher yields we expect likely tightening of liquidity, tightening of global financing conditions, which will have impact on the domestic front, election risk, high inflation, currency pressures. All these have indicates that yields are likely to be higher in the second half of the year.
Right, and let me take you back to the equities market. Now, we've seen, other markets, global equities market, they are searching for the bottom, right now, talking about investors. But here, ours has been like the best performer, in the first half. Do you see that continue in the second half, or is it time to start looking down?
Well, in the second half, we think that the performance in the market in the second half is not likely going to be a mirror. It's not going to replicate what we see in the first half. So in the first half of the year, we saw over 22%, which was solid, for the market. But in the second half, given the factors I've mentioned, higher yields, which would dampen valuations, electioneering and the uncertainty that it brings, these suggest that there's likely to be some sort of weakness in the second half of the year. Overall, broadly, we think that the market will close positive due to what we've seen in the first half of the year, but we think that the second half is going to drag down the performance of the first half. So we expect some sort of weakness in the market, unless investors who are likely to win in the second half are those who are able to rotate into sectors that are likely to take advantage of the prevailing dynamics, the yield fronts, commodity exposure, and having very solid fundamentals.
Right, and even though the first half was quite challenging, yet we saw, that performance. But what investment opportunities are you seeing, in the equities market going into the second half?
Yes, so like I said, we see opportunities for banks, for example, higher yields positive for them, because we did an analysis and we discovered that a 100 basis point increase in assets of banks could lead to about 17 to 18% increase in interest income, which is solid looking at where they're coming from last year, because most of the banks complained of the impact of low yields on their books. So yes, we expect that higher yields will be very positive for banks, as we go into the second half. So that's one of the sectors that we favor. We also think that the oil palm producers are likely also to continue to benefit from the rally that we've seen in CPO prices since the beginning of the year. Even though there are concerns, there are indications that commodity prices are tapering in terms of the rally, but that's only relative to the first half of the year. If you look at the performance relative to last year, we think that there is some opportunities that, for these companies.
All right, Jerry, all eyes are on the second half, at this point. And today, all eyes on the MPC to see what the decision is going to be. Thank you so much, Jerry Nebwe, research analyst at Cardinals. It was great having your perspective on the program.
Thank you for having me.
All right, now after the break, commodities market update is next. Do stay with us. This is Business Morning. All right, now for commodities market update, we have Bolanle Agbaje, analyst, financial derivatives company, join us right here in the studio. Great to have you, Bolanle.
Thanks for having me.
So we're still seeing that back and forth in the oil market,
yes.
At this point. Today it's up, tomorrow it's down. It seems to be, it seems we need to get used to this price movement at this point.
It's the characteristic of oil prices is extremely volatile, and this up and down movement, will be caused by any slight shift in what happens with supply or demand, and even any, information. So, so far it was Biden's meeting with Saudi Arabia, and the fact that there was nothing, he didn't come back with anything solid in terms of supply, and that obviously, increased or signaled an effect of, tighter supply in the market, and that obviously increased oil prices. But going forward, the fact that, we're still seeing a new variants, different types of new variants in China, which is, dampening or increasing fueling this demand, and also the fact that we've not seen any boost in supply. We do expect that prices will still remain elevated, most likely above $100 per barrel.
And still we'll see this for the rest of the year, the way it's looking.
Yes, it seems like this is what's going to happen, especially if there's no change with, what's going on with Ukraine.
And back here, we see oil marketers have finally increased the price of PMS about 170,
the inevitable has finally happened.
Yeah.
We always expected that this would, be the case, considering the fact that oil prices has gained a significant percentage from the time that oil price was set at 165 naira per liter. And, almost marketers have complained here and there, created this artificial scarcity in the market to come more or less signal the fact that, their pockets are squeezed, costs are very high, and the fact that dollar is currently trading at 620 naira, to the dollar in the parallel market. So the currency weakness is not also favorable for them at the moment, and that has obviously increased their general cost. And I think the subsidy payments is not even scratching, the surface for them as well. So they've complained about the fact that this price needs to go up the same way you have diesel and the same way you have kerosene, reflecting what's actually happening in the market. Although they haven't come out to say there's been an official price, but the fact that, most marketers have increased prices. I think the lowest price we're seeing in the market now is only about 170 if you're lucky. In other parts of the other states, you're seeing, about 200, even above 200. And so it's ranging from about 170 to 200 at the moment. There's no signal, there's not one price at the moment, but we're seeing different prices from that range. And
it almost seems like the forces of demand and supply at play, with these prices we're seeing.
Yes, but I think other than that is the fact that, costs are very high. So if you have an environment that is, increasing costs, you're definitely going to see spikes in prices. And we definitely see the demand with the fuel queues that we have seen in the past week. And I think the ultimate thing, what it ultimately boils down to is the inflation rate. The fact that inflation rate is actually going to continue climbing. The MPC is supposed to finish the meeting today, I think, in the afternoon. So we'll definitely know what, the results will be. With FDC, we do predict that, there will be another rate hike. It would be the second rate hike in 70 months, which is not, it's not nice, but it's what is supposed to happen. The fact that it's not peculiar to Nigeria. You have rate hikes in many African countries, considering the fact that, we're more or less battling with this high price environment.
How many basis points are you guys looking at?
We are predicting 50 basis points. I know it's 50. Huge, but inflation is skyrocketing, and I don't think there's any slowing down. Except, even if we're more or less going to be entering the harvest season by the end of Q3, I don't think it would bring inflation as low as what we expect, considering the fact that exchange rate still poses a problem. You have diesel price, then you also have prompt price as well. So,
but don't you think they should maybe hold at this point to let the first hike actually,
I think the reason why it might not, they could hold, but I think the reason why it might not be feasible is because they had delayed, the rate hikes for so long. If, maybe they had increased interest rates a few months back, maybe we wouldn't see inflation get to as high as 18.6%. But right now, it seems like it's what is needed to more or less crash inflation rates.
How many hikes do you think we have to actually crash inflation rate?
You can't really predict. It's how, the markets how the market responds to these rate hikes for you to determine. And that's why they usually have the meetings every 2 months,
And, some are saying that these hikes, would have little effect. With the inflation we're seeing.
Like I mentioned, it seems like it might be, later than ever. But one thing I know it will do is more or less depress demand that we're seeing in the market. And I think more importantly is to bring in that forex, bring in more investors. The fact that, we're seeing a currency weakness with the dollar at the moment. So most of these investors will look for alternatives. Some of them have already, gone to gold and oil. And I'm sure they'll be looking at African countries to put their money in. Now, right now, dollar scarcity is what's clouding this economy.
Yeah, that's a big issue there. But let's look at the commodities now. We've seen cocoa prices actually up,
Yes,
even
despite
though demand is
despite the
not
fact that
there.
demand is it's not that it's not there, it's there, but it has just,
It's come
it
down,
has just
yeah.
come down a bit. And it's great for us. We're major exporters of cocoa. I think we produce about 280,000 metric tons, which is great. Currently, the price is about $2,300 dollars per metric ton. So it's a good win for us. Although we do have the fact that other agricultural commodities that we import is, it's not favorable. Although the good news, we import a good amount of, I think about 2 million metric tons of palm oil. And that was what we imported last year from Indonesia. And Indonesia is actually removing export levy at the moment. So I think they're removing that temporarily just to, boost exports and I'm sure their forex reserves as well. So it's great for us when it comes to, I think we spent about $44 million on palm oil in 2020 is huge. So although we're smiling at the fact that cocoa prices are remaining, elevated, but, we do have a lot of our agricultural products that we do import that are still quite expensive.
What about wheat? How's that looking at this point?
Well, wheat is still high.
Yeah.
So one thing is extreme weathers are not great for, a majority of these agricultural commodities. And currently, we're seeing extreme weathers in some of the producing countries of wheat. I think the one we had seen recently is Argentina. So America as well, you have a lot of countries complaining about extremely hot weathers. Those are not really great for the yields, and that has obviously bumped the prices of some of these products.
And looking at the goodies on your slide, it shows that the rate hike is expected to actually taper the demand pool. And I'm wondering, right now consumers are squeezed.
Yes, so it will just squeeze them, even more and, more or less feel the impact on inflation. But I think the more important thing with the policy rate hike is the fact that you're attracting forex. I think that's what they're trying to, more or less gain from, because you have a lot of African countries also following suit. So you need to be competitive in the market.
Ghana is another example.
Ghana is another example. South Africa is expected to, increase policy rate as well. So that's, you have to be competitive in this market space.
And all of this is impacting the commodities, commodity prices.
Yes, definitely, because you do have manufacturers that have borrowed, and although have, increasing debt to pay, and that would obviously factor into the cost of some of their, of the functioning of some of their companies.
All right, let's look at the agricultural commodities now, domestic commodities in Nigeria. How's that looking?
Yeah, it's still red. We do expect that, when the harvest season comes at the end of Q3, we should see maybe slight fall in some of the prices, but right now prices are elevated. I think it's only with the exception of beans, but we're definitely in the red.
Definitely in the red, and we're seeing that with most of the flours,
tomatoes, flour, rice, major staples. That's, and I'm sure every individual can attest to it because they're feeling it's biting hard.
Because when you actually go to the stores, it feels like it's more than 18%.
Yes, their purchasing has doubled more or less, or even tripled. What you would have used 10,000 naira, for example, to buy can only buy maybe less than half of, what you used to buy. And a lot of individuals, I've spoken to so many people, and it's the same conversation here and there. And that's, as a result of, obviously, you had the COVID that brought this on brought it on deeply, but you also have the fact that Russia-Ukraine war has more or less made it here to stay.
We see they're really feeling the pinch in Zimbabwe, because about yesterday we saw that the government was planning to meet retailers, to discuss these rising prices. And I'm wondering, what can the retailers actually do at this point?
Yeah, it's not peculiar to Nigeria, like I mentioned. Everyone, it's global. It's around the world. The only good thing is most of these more developed countries try to cushion the effect by, their stimulus packages and all of that. I don't think Nigeria is doing that. Or even if they're doing, it's not very effective. A lot of these policymakers are more or less focused on the next, incoming election. So it's not favorable for us at the moment.
And some analysts actually say is the stimulus packages, the money printing,
Yes.
due to COVID,
Yeah.
that
That
spurred inflation,
Yeah.
Bringing us to where we are right now. We've seen some of these other countries talk about actually, helping out consumers, at this point, and it seems like that would still spur inflation even higher.
Yes, it will, but at the same time, I think they're just weighing the options. So you have it's more or less you're giving a little, you're taking back as well. So as much as you're giving, you're also increasing, interest rates to take back just a little about. From what you had, already given. So it's a very difficult situation for policymakers, especially monetary policymakers, because you have to keep watching to make or implement policies. This is a very peculiar moment. I don't think they've ever seen this kind of situation, in the past how many years. And so some of them are just learning by the way consumers, behave or respond, how they form their rational expectations.
And bringing it down here, the government. How much options, do they have,
I think their hands are squeezed just because of lack of funding. And that's, as a result of the fact that they keep spending hugely on recurrent expenditure. So with if they, do the opportunity cost of, paying payments of these subsidies could be investing in what can actually improve or increase growth numbers in the future. And, that's the problem with Nigeria.
And at this point, we shouldn't expect support.
Yes, I think, right now, especially if they allow the pump price, reflect market prices, it would bite very hard in the short term. But, going forward, if we do make, right investment choices as a country, we definitely would, see more benefit. And that's what, most of these countries are benefiting from, the fact that they had already made very, amazing decisions prior. And so they can reap the benefit of that. They have good infrastructure. They have, so they don't have to spend, on that. And that's what Nigeria is kind of battling with.
Right. So a lot to unpack there. Well, we'll be getting the decision later today.
Yes,
We'll see FDC saying 50 basis points.
Yes.
Who knows? We might see higher because we've seen, other countries, go more hawkish,
yes.
At this point. But 50, still high.
But we do hope that that's what, the case is, because inflation is one thing that we have to, watch out.
It is one thing that we have to watch out for. And there's also that issue of stagflation.
Yes.
Because everyone is hiking rates. So there's also that, massive risk of, entering a recession, global recession.
Yes.
And a global recession would impact, emerging economies.
A lot of analysts believe that the global recession is imminent. It's coming, and all you just have to do is prepare for it.
Just prepare for it.
Yes.
And investors also have to prepare, because
exactly.
at the end of the day,
that's
looking
why
for
most
that
of them are going to, some commodities like gold.
Gold.
Yes.
And we see that price, the price of gold is actually dropping, even though...
Well, it's still a safe haven in
Still a safe
sense.
haven,
Yes.
even though we're having little, price movement to the
Which
downside.
is normal.
Which is actually normal.
Yeah.
All right. Now, thank you so much, Bolanle Agbaje, analyst, Financial Derivatives Company.
Thank you for having me.
Great to have you. All right. Now, so we'll take a moment. Business Morning returns. Do stay with us. All right, now let's head on to the markets. We have Anite right there with all the details. How's it looking, Anite?
Good morning, Ladi. I must say it's looking pretty good for the market. Don't forget we're starting. This is the third trading week of July, and remember, just last week we had a single day massive gain for the market.
Just that one day, yeah.
Yeah, just one day. Although, yeah, the sectors were not all that impressive, but the one day, the massive gain from Airtel Africa, which just comes in once in a while, and then when it comes up, it makes a very massive impact on the downside, on the upside. So the market had 472 billion naira gain in just one day, and then yesterday at the close of the Monday's trading session, we had another gain. So let me bring you up to speed with how Monday's trading session turned out. At the end of the day, 0.20% is what the market printed on the all-share index. In value, that translates to about 57 billion naira added to the market. But See, don't get it wrong. This market is still a little bit soft because that gain came largely on the back of Seplat's share price. It gained the most and lifted the market to this. But when you take a look at the sectoral performance, like I mentioned to you, it's mostly in the red. The greens were just 2 out of the 5 key counters of the market, while the other 3 counters were in the red. The biggest loss was from the consumer goods sector. Its components recorded some profit taking by investors, but when you take a look at it, the Fugas also, they were up, but Zenith's share price was in the red, and that's why this market was in the red on the banking counter. Flipping over to the activity chart, the volume of transactions carried out there was down by 38.8%. Value was also down by 16.09%, and then the deals was up by 16.23%. So now to give us more information about the market, let's talk to a stockbroker at CSL Stockbrokers, Richard Akimoladu. Richard, thank you for joining us on the show.
Good morning, Anita. Thank you for having me on your show this morning.
Yeah, well, I just got back from vacation, so quite a long time I spoke with you. Now, can you bring us up to speed? Seplat, I would call it the stock of the day. Yesterday, it was the major contributor to what the market gained, 57 billion naira. At the same time, it appeared as the most traded stock by value at 1.3 billion naira. And then the volume, in terms of performance, how is the share price performing at the moment as we speak?
Yeah, so the share price of Seplat recorded a new price yesterday. It's trading around 1,000, above 1,400 now, and that's where it's trading currently. Though there's the market is just open, not quite long, and there's no volume on that name yet. As you've mentioned, the positive gain that was recorded in the market yesterday was just due to the gain we witnessed in Seplat. As you know, that is among the highly capitalized stock, and when you see a very significant gain in such a name, you expect the market to close in a positive territory.
Okay, Richard, now with the gain that we've had so far, today is the 19th day, so that means that the month of July has almost, it has more than halved into its way out, and month-to-date gain is about 1.0%. We're having the MPC meeting today. So what's your outlook for the market? And at the same time, we should be expecting second quarter and half-year results released to the market. So what's your take on what's your outlook for the market when you take all this into consideration?
Okay, thank you. So looking at the market year to date, we are in a very strong positive territory, and so on the back of good corporate earnings that were recorded in Q1 and full year, and even dividend news. And though we continue to see bargain hunting in the market lately, we begin to see sell pressure across almost all sectors, as you just mentioned in your report now, that even yesterday again, that was just due to only Seplat that put the market in a positive territory. So we continue to see these bargain hunters in the market try to actually book profit here and there in the market. But we are optimistic that as we go into to see the half-year results of company coming into the market, we believe that this might change the market going forward. We might begin to see some cherry picking and positive movement in the market across our board.
Okay, thank you, Richard. So, as usual, investors, myself inclusive, will keep our eyes on the market as the day unfolds. So, that was Richard Akimoladu, equity trader at CSL Stockbrokers. Right. So, Ladi, yeah, I don't know if time is not your friend, especially because when you look at the board, I wanted to give you more information, but...
Yeah, so Anita, we'll be looking out to how investors, react to the MPC decision, today. We'll be counting down to that. We'll see how that plays out about 12:30. We'll see how investors react. Either they're going to sell off or they're going to buy more. We'll see how that plays out. Thank you so much, Anita, for the update. All right, now let's head on to London. We have Juliana standing by right there in the UK. Great to have you, Juliana. So
Good morning, Laddie.
Yeah, we're seeing more data coming out from the UK. This time, it's UK pay. It's fallen to the fastest rate on record. How's this being received over there?
Yeah, that's absolutely right. We've had data this morning, fresh data from the Office for National Statistics, having a close look at the labour market. And as to be expected, it does appear the labour market has stabilised. It remains at a record low of 3.8%, which can be considered a good thing. There are more people in employment. However, lots of people are saying that, the data is insufficient because you may be in employment, but are you on this 0-hour contract, which is a system where you basically waiting for work, but you may not indeed get it, but you're still considered employed. But the real issue now, of course, has got to be wages. Now, week upon week, it is showing, the ONS, that wages are actually rising. If you discount bonuses, they've risen by about 4.2%. 4.2% in an average year would be great, but it's not an average year. We are going through the worst cost of living crisis in a generation. Inflation currently at 9.1%. So it basically means that your wages are falling, and this is a huge issue. One of the reasons why we've been seeing hundreds of thousands of protesters take to the streets to demonstrate against stagnated wages. We've also seen the biggest rail strike in British history a couple of weeks ago. We've got another one coming up in a couple of weeks from the ASLEF union, and barristers, junior barristers, they've been demonstrating week upon week because they're not happy with their pay. So it is a significant issue. One of the reasons why we've got 1.29 million vacancies in the UK at the moment is because it's really difficult to find high-skilled workers that are not going to get paid what they're worth.
Quite interesting. I would see economists saying that a wage hike would also, spur inflation even more. Quite a tough decision to make at this point. But how do you see this UK jobs data impacting, Bank of England decision?
Well, it's a good question, and it's something that, economists are trying to rattle their brain over. We heard from Michael Saunders, didn't we? I think I discussed that with you yesterday when I was sweating in the heat on Regent Street. But Michael Saunders, one of the Monetary Policy Committee members who is an outgoing MPC member, he'll be leaving next month. But he's been saying, look, hold your horses. Bank of England doesn't want to do, too much too soon. But then the accusation is they're, moving too little too late. Interest rates are at a record high at the moment, 1.25%, especially if you look back in December when it's at a record low of 0.1%. And there are suggestions it could rise to about 2% to try and abate inflation. But then, of course, there is a knock-on effect. Interest rates going up does affect mortgage owners, and there are millions of people whose mortgage payments have been going up month on month every single time that the Bank of England do raise these interest rates. But we just have to wait and see. I think Thursday is the day everyone's looking at. That's when we're going to get inflation figures for the UK, expecting to be another 40-year high again at about 9.2%. But, those famous words of anyone in business is just we have to wait and see, laddie.
Wait and see. All right, Juliana, but I'm happy you're indoors right now, so it should be cool, where you are right now. Thank you so much, Juliana.
Thank you, laddie.
All right, now let's take a look at the markets. We see Fear Greed Index this morning, talking about the crypto market there. We're seeing extreme fear still in that market, but an improvement, about 30 points today. It's been lower than 15 points for the longest time now, but we're seeing 30 points inching, closer to that greed spot. Been trying to see when that actually hits. We see market cap now $1.02 billion. That's up 1.93%. Volume traded in the crypto space there, $108.59 billion this morning. That's up a whopping 61.45% this morning. And we see Bitcoin dominance sitting at 41.24%. Price of Bitcoin this morning, $22,033 there, down 0.10%. A marginal decrease was seen in price of Bitcoin. Some volatility in the market this morning. Volume traded $45.87 billion. And we see price of Ethereum $1,500, down 0.13%, with volume traded at $30.37 billion. So we're seeing quite, mixed sentiment in the market right now. A couple of good gains we're seeing. Talking about the top 5 gainers, let's bring in Olumide Adesina now, financial market analyst. Hello, Olumide. Okay, I guess we don't have Olumide yet, but let's look at the top alts by market cap. There we're seeing BNB, $260. That's up by 0.01%. Cardano, 48 cents, up 0.20%. And we're seeing Bitcoin remain supported there above the 20,500 zone. Price started a decent increase. I was able to clear the 21,500 resistance zone. So we're seeing the altcoins actually react positively to that move. There we're seeing top movers, talking about the top 5 gainers that we're seeing next to there, topping that counter up 42.96%. Looking pretty good this morning, giving almost 0.5% gain there. And looking at the price of Ethereum there, it's holding strongly to that $1,000 mark. Way far from that now, $1,531 holding on. And we're seeing the altcoins actually follow suit when it comes to the movement there with the king of the altcoins. And the top 5 losers list, we're seeing Lido there. That's down about 12.95%. AR Weave there, also down 5.51%. So we're seeing a couple of movers there. Now let's see how the bulls are reacting to that 22,000 resistance zone. The price traded higher there. Price of Bitcoin, the $22,766, trying to break another resistance zone. Traders are eyeing that $23,000 mark. If maybe Bitcoin might actually break that the way it's going at this point. We see the bulls trying to defend that part, but the bears are also fighting hard, trying to bring the price down at this point between the shortest and the longest there in the market. Look at the price of Ethereum there, $1,500, holding on really well to that $1,000 mark. Let's look at the top 5 gainers. We're seeing Nexo topping that counter. Nexo there, 87 cents. It's up 42.96%. And Ethereum Classic, one of the oldies in the market there, up 18.84%, holding on really well at $25.40 per coin. And we see Near Protocol up 16.91% there. It's at $4.45. And Phantom, one of that was trading about $3 at the high when Bitcoin was over $65,000. We're seeing Phantom now trading at 32 cents. Way far away from that all-time high of about $3 and a couple of cents. It's up 16.30%. And we see ApeCoin there trading at $5.86. That's up 11.57%. Let's look at the top 5 losers now. We see Lido Finance there down 12.95%. And Arweave down 5.51%. And Elrond there down 4.04%. And Quant there, $101, 3.37 there. So it's not looking bad, looking at the market there. We're seeing more of double-digit gains this morning and single-digit losses. It's looking okay in the market. Now let's see where the price can go. We're seeing traders are watching Bitcoin at this point. If it's able to break that $23,000 level, we're seeing traders talking about it going as high as the 30K level in the short term. But at the end of the day, we still have the headwinds still holding on to most of these risky assets. At this point, we're seeing global equities market, the NASDAQ, that didn't close too well yesterday. It closed in the red yesterday, and we see that close correlation between the Bitcoin and the crypto market and the NASDAQ. So at the end of the day, all eyes on the equities market. All eyes on inflation, all eyes on the Fed at this point. What are they going to do at their next meeting? How some traders are saying they're going to go as high as 100 basis points. Some are saying maybe 75 basis points, talking about the Fed. And we see the markets actually react to all of that. So it remains to be seen how Bitcoin and the equities market, talking about global equities market, actually perform looking at Thursday to the end of the week. All right, that's it for the markets now, and that's a wrap on the program. Don't forget to join us at 12:30. We'll be going live to the for the MPC meeting, and we'll have our top analysts right here with us in the studio to unpack what the MPC decision is going to be and how the recent hike has impacted the Nigerian economy. Don't forget to join us. It's truly going to be an interesting one at 12:30. Thank you so much for watching. I'm Ladi Williams. Bye for now.